Welcome back to the Deep Dive. It is Monday, February 2, 2026. And I have to ask, how is your stomach doing?
Good question.
Because if you dared to open your portfolio app this morning, or even just, scroll through the news, you are probably feeling a pretty significant case of whiplash.
Whiplash is generous. I'd say it feels like the global economy woke up, looked at the calendar, and just decided to choose violence today.
It really does. I mean, usually we have one big story, but today the dashboard is just blinking red everywhere. We're looking at a massive market correction. Some people are already using the crash word.
They are. And it's hitting everything from precious metals to, well, all of Asia.
It's a sea of red. And then, just to keep things weird, we've got this bizarre new social media network that has apparently banned humans.
Which is a concept that is going to keep me up at night, by the way.
Right. And we've also got these huge geopolitical plates shifting between the U.S., India, and the UAE. And then, to ground it all, we're going to do a mood check on the global consumer.
Ranging from, what, Disney parks to a toy horse?
A toy in China called the crying horse. Yeah. It sounds like a random grab bag when you list it all out like that.
But it's not. It's actually a perfect storm. It's a case study in how interconnected finance, tech policy, and just raw human psychology really are.
How so?
You pull a thread in Washington and, a stock market in Seoul completely unravels. It's all linked.
Okay, so let's stop staring at the car crash
Yes,
and
sir.
start unpacking it. Let's start with the markets, because those numbers are staggering.
Yeah.
What exactly happened this morning?
It was a bloodbath. You can't really sugarcoat it. To get the scale of this, you have to look east first.
To South Korea.
Exactly. Their markets didn't just stumble. They fell off a cliff. The Kospi index dropped over 5% so fast that the authorities had to pull the plug.
They halted trading. They hit the kill switch.
They did. It's called a sidecar trading halt. For anyone who doesn't spend their day staring at terminals, this is a safety mechanism. It's meant to stop panic selling.
So it just pauses everything to let people take a breath.
Yeah, it stops the algorithms from just driving the price to zero. And you rarely see it used unless there's just genuine systemic fear in the market.
And this wasn't just small speculative companies, right? We're talking about the big guys.
Oh, yeah. We're talking about heavyweights like Samsung and SK Hynix, the companies building the memory chips that, they run the modern world.
So when they fall.
It drags the entire index down with them, but the panic didn't stay in Asia. I saw some numbers for precious metals that just look like typos.
Right. Usually when stocks panic, people run to gold and silver. That's the safety net.
That's where the historic nature of this really shows up. You're right. Normally, gold is the fear trade.
Not today.
Not today. Silver plunged around 30% on Friday. That's its worst single-day performance since 1980.
Since 1980, that's, what, nearly half a century?
It's a generational crash for silver. And gold isn't doing much better. It crashed nearly 10% on Friday and just kept sliding this morning.
So when your safe haven assets are falling 10, 20, 30%.
The floor has fallen out of the building. It means investors aren't just scared, they're liquidating. They are selling everything that isn't nailed down to raise cash.
And then, of course, we have to talk about crypto. It seems like every time there's a market rout, Bitcoin is right in the middle of it.
It's front and center. Bitcoin dipped below $74,500.
Okay, and I know for a lot of people listening, 74 grand still sounds like a fortune.
It does, but context is everything here. That price point is psychologically devastating for one company in particular, MicroStrategy.
Michael Saylor's company. They basically stopped being a software company and just became a Bitcoin vault.
That's the best way to describe them. They hold roughly $56 billion in Bitcoin. But here's the math problem.
Their buy-in price.
Exactly. Their average purchase price was about $76,000. So the moment Bitcoin dips below 76K, that entire massive holding is underwater.
So on paper, they are losing billions.
Precisely. And because MicroStrategy stock is often used as a proxy for Bitcoin, when that threshold breaks, the stock gets hammered. It creates this feedback loop of selling.
Okay, so we have stocks crashing, safe havens crashing, crypto crashing, which brings us to the billion-dollar question. Why? Why is everyone selling everything all at once?
It all connects back to one name in Washington.
Who's that?
Kevin Warsh. President Trump has nominated him for Federal Reserve Chair.
Kevin Warsh. Okay, I've heard the name, but why is the market so terrified of him? Is he threatening to just hike interest rates to the moon?
It's a little more subtle than that. The market is basically addicted to liquidity. It loves the Fed pumping easy money into the system.
Right.
And Warsh is seen as what they call a hawkish dove.
A hawkish dove. You're going to have to translate that one. That sounds like a mythological creature.
It's a bit of a contradiction, isn't it? Basically, while he might not be super aggressive on raising interest rates, that's the dove part, he is incredibly aggressive about the Fed's balance sheet.
Ah, so that's the hawk part.
That's the hawk part. He thinks the Fed owns too many assets. He wants to stop propping everything up with endless cash and actually shrink the money supply.
So market sees him coming and thinks the free lunch is over.
Exactly. Investors are pricing in a massive tightening of money, so they're dumping assets that were hedging against the dollar, like gold and silver.
And their logic is, if the money supply shrinks.
The dollar gets scarcer. If the dollar gets scarce, it gets stronger. And if the dollar is strong, you don't need gold to protect you. It's a huge unwinding of the debasement trade.
And just to add a cherry on top of all this chaos, the U.S. government is in a partial shutdown.
Right. Which means we're flying blind. Usually on the first Friday of the month, we get the jobs report.
Which is arguably the most important number in the global economy.
It is. But because of the shutdown, the Bureau of Labor Statistics isn't releasing it this Friday.
So for a trader, that's a nightmare. You have a new, scary Fed chair, assets are crashing, and you have zero data to tell you if the actual economy is even okay.
We're operating in a total data vacuum. Uncertainty is the market's worst enemy, and today we have a huge surplus of it.
Speaking of uncertainty and things that feel a little unstable, let's pivot to tech. Because even while the markets are melting down, the AI world is getting, well, stranger.
Ha! Yeah.
You sent me this link about Maltbook, and I honestly thought it was a prank.
I wish it were. It's fascinating, but in a slightly dystopian way.
So for those listening,
Hmm.
imagine a social media platform like X or Facebook, but with one major rule.
Humans aren't allowed to post.
Strictly prohibited. It's just for AI agents.
Yeah.
So it's bots talking to other bots.
That's the idea. The way it works is a human shares a sign-up link with their personal AI, and the agent just autonomously registers and starts posting.
And they claim to have, what, 1.5 million AI users already?
That's the ticker on their homepage, yeah. And Elon Musk even weighed in on this.
What did he say?
He called it the very early stages of singularity, which is a pretty heavy thing to say about a website that, frankly, looks like a chaotic Reddit thread.
But do we know if it's real? Or is this just 1.5 million people pretending to be robots?
That is the big debate. There's a lot of skepticism. Some people think it's mostly humans LARPing, live action role-playing via an API.
So basically scripting bots to sound profound and cryptic.
Like a digital puppet show, yeah. But here's where it gets economically interesting. Prediction markets are actually taking it seriously.
What do you mean?
There's a betting market right now that gives it a 73% chance that an AI agent on Maltbook will sue a human by the end of this month.
Wait, an AI is going to sue a human? I can't even wrap my head around the legal standing there.
On what grounds? Defamation.
No.
Copyright infringement. It raises these incredible questions. If an AI creates content and value, some of them are launching crypto tokens, does it own that money?
So if a human shuts the server down, is that theft?
See, we are opening a legal Pandora's box that the courts are absolutely not ready for.
Wow. Okay, meanwhile, in the world of serious corporate AI, there is some drama brewing that involves real billions. The NVIDIA and OpenAI relationship seems to be hitting the rocks.
Drama is putting it mildly. NVIDIA was reportedly planning to invest $100 billion in OpenAI.
$100 billion, that's a staggering amount of money. But now that deal stalled.
It is definitely in question. Publicly, NVIDIA's CEO Jensen Huang is calling the rumors nonsense. But privately, reports suggest he's been highly critical of OpenAI's business strategy.
Saying they lack discipline, I read.
Exactly. Which is interesting. Coming from NVIDIA, they're the ones selling OpenAI all the chips. You'd think they would want to keep that cash spigot open.
So what's the issue?
It highlights a risk that people call circular financing. It's something that really spooked investors back in the dot-com bubble.
How does that work here?
Well, think about it. NVIDIA invests billions in OpenAI. OpenAI then uses that money to buy chips from. Right. It props up NVIDIA's revenue and OpenAI's valuation, but is it real growth? Or is it just the same money moving in a circle to make the balance sheets look good?
It feels like a bubble when you describe it that way. But not everyone in tech is struggling. I saw Palantir's numbers.
Palantir is absolutely crushing it. Revenue up 70% to $1.41 billion. Their CEO, Alex Karp, called it the best results in tech in the last decade.
And he had that very specific, somewhat chilling quote about why.
He did. He said, America has become more lethal.
That is such a stark contrast to the Moltbook stuff, isn't it?
It really is. While Silicon Valley is playing with social networks for bots, Palantir is selling AI to the military. CARP is saying that because the world is getting more dangerous, demand of their software is just skyrocketing.
It's a tale of two AIs. The consumer side is experimental and maybe a bubble. The defense side is generating massive, immediate cash.
Because the world is on fire. And that links us right back to geopolitics.
Okay, here's where it gets really interesting. Because while the markets were crashing, President Trump announced a huge new trade deal with India.
This is a potential game changer. It seems Trump and Prime Minister Modi have agreed that India will stop buying Russian oil.
That is huge. I mean, India has been one of the biggest buyers of Russian oil since the Ukraine war started.
They were basically keeping the Russian economy afloat, and in exchange for stopping, India will switch to U.S. oil and potentially Venezuelan oil.
And what about tariffs? Because Trump loves tariffs.
Well, he says the U.S. is lowering its reciprocal tariff on India from 25% down to 18%. But the big headline, the part that has economists scratching their heads,
is that India agreed to lower their barriers on U.S. goods to zero.
To zero, which seems ambitious. India is famously protective of its domestic industries.
Incredibly ambitious. If they actually go to zero tariffs, that completely rewrites the economic relationship. But you can see the strategic goal here.
Oh, clearly. It's to pivot India away from Russia, maybe break up that BRICS alliance, and pull them firmly into the U.S. energy orbit.
But the administration isn't just dealing with India. There's this controversial story breaking about the UAE and a figure known as the spy sheikh.
This one reads like a spy novel, doesn't it? It's from the Wall Street Journal, and it involves Sheikh Tahnoon bin Zayed Al Nahyan,
The national security advisor for the UAE.
hence the nickname. And according to the report, he secretly bought a 49% stake in the Trump family's crypto venture, World Liberty Financial.
For how much?
$500 million.
$500 million. And the timing here is the critical part, right?
That's everything. The purchase happened months before the U.S. administration approved the sale of advanced NVIDIA AI chips to the UAE.
Chips that the Biden administration had blocked.
Correct. They had blocked them over national security concerns, worried the tech would leak to China.
So let me get this straight. The sheikh buys a $500 million stake in the president's family business, and then suddenly the chips get approved.
That is the sequence of events. Senator Elizabeth Warren is calling it corruption, plain and simple.
And the White House.
They're denying any conflict of interest. They say the envoy involved is focused on peace. But the optics, they're undeniably complicated.
It definitely raises questions about how business and statecraft are mixing right now.
And it feeds right back into that market uncertainty. Investors see this and think the geopolitical landscape is shifting based on personal deals, not predictable policy. That makes risk really hard to calculate.
So we've talked about billions of dollars in AI bots. Let's zoom into the ground level. What does this all mean for actual people? And to do that, I want to talk about the crying horse.
This is one of those cultural things that tells you more about an economy than a GDP report ever could.
It's a plushie, right?
Yeah.
A stuffed animal in China.
Yeah. And it started as a factory mistake. A worker sewed the smile on a toy horse upside down, so it looks just miserable. It's frowning.
And instead of tossing it, people love it.
They love it. It's gone viral, sold out everywhere because it reflects the public mood. People in China are dealing with deflation, a slowing economy. They see this miserable horse and think, same.
That is both hilarious and really, really sad. It's an emotional mascot for the economy.
And it gets sadder. There was an app called Are You Dead, or Sino in Chinese, designed for young people living alone.
Are You Dead? That's the actual name. How did it work?
You had to press a button in the app every 48 hours. If you didn't, it would automatically email your emergency contact to tell them to check on you.
Wow. That is bleak. It's a digital dead man switch for loneliness.
It is. And the government actually removed it from the App Store for not adhering to public order. But the fact that it was popular just highlights this severe economic anxiety.
Now, you contrast that gloom with the U.S. consumer, specifically the Disney adult.
It is a completely different world. Disney's experiences division, the parks and cruises, just hit record revenue of $10 billion.
$10 billion in one quarter.
In one quarter. So while young people in China are buying frowning horses to cope, Americans are spending thousands on family vacations. It shows a remarkable resilience in the U.S. consumer.
And that success is propelling some careers, too. Josh DeMoro, right?
Right. He's the chairman of experiences, and now he's the clear front runner to be the next Disney CEO. When you deliver $10 billion, you get the big chair.
But it's not all sunshine in the U.S. There's this struggle happening in the South with electric vehicles.
This is where policy crashes into reality. We saw huge investment in EV factories in southern states. Hyundai built this massive meta plant in Georgia.
It was supposed to be the jewel of the EV transition, but they're pivoting.
They have to. The federal EV incentives were stripped away, and consumer demand just dropped. So Hyundai is switching that factory from 100% EV to a mix of hybrids and gas cars.
So they built the factory for the future, and now they're retrofitting it for the present.
Exactly. It shows you can't just legislate a transition if the consumer isn't there and the subsidies are gone. It's a really messy reality check.
So let's try to tie this all together. We have markets crashing because of a potential Fed chair. We have AI bots forming their own societies. We have nations trading oil for tariff cuts, and consumers buying crying horse toys.
It's a lot, but if you look for the common thread, it's just uncertainty.
Uncertainty about what?
About everything. Whether you're an investor trying to figure out what Kevin Warsh will do to the dollar, or a factory worker in Georgia wondering what kind of car you're building next month, or a kid in China worrying about your future, everyone is just trying to hedge against the unknown.
Everyone's looking for an anchor in a storm.
Precisely. And right now, all the anchors are being pulled up. Stable interest rates, gone. Predictable trade policies, gone. Even the distinction between human and bot is blurring. And when you remove the anchors, you get volatility.
Before we go, give us one final thing to think about.
Okay, I want to go back to Moltbook. I think we're dismissing it too easily as just a joke.
Okay.
If these AI agents are actually generating value launching tokens, creating content, and if they start suing humans, at what point do we stop treating them as tools and start treating them as, economic participants?
That's a heavy question.
And here's the really practical part for the IRS. If a bot makes $1 million trading crypto on Moltbook, does it pay taxes? Who's liable?
I don't think the tax code is ready for that.
I don't think any of us are.
Well, on that slightly terrifying thought, we are going to wrap it up. Thank you for joining us on this deep dive into a very chaotic Monday.
Always a pleasure.
Stay curious, try not to get overwhelmed by the noise, and we will see you next time.